America is facing a worker shortage. According to the Bureau of Labor Statistics, there are more than 6.7 million job openings in the United States. That's more than the number of people looking for work. And one reason could be the growing opioid epidemic. A recent Fed report shows 1/5 of adults are exposed in some way to opioids. And at the same time, some industries are actually relaxing drug testing standards to alleviate labor shortages. Our next guest says industrial stocks could be seeing the biggest impact from opioids and worker shortages. Joining us now is Samir Rathod, the senior analyst at Macquarie. Samir, great to have you with us.
Thanks for having me on the program.
I think what you did was really fascinating. You took a look at what is called MME, or morphine milligram equivalent per capita usage. You overlaid that over various counties, and you saw which companies were most exposed in terms of workers and labor to those counties. So what did you find?
Yeah, that's right. I think we kept hearing about this opioid epidemic for quite some time, various news organizations and what have you. The one place where we found this conversation that was notably absent was in earnings calls or, when we talked to management. So specifically in this report, we looked at drug usage and how is it impacting the machinery and engineering construction sectors. Unproductive labor on large energy infrastructure projects has caused companies to report projects being late or delayed to the tune of hundreds of millions of dollars. And when we talked to these companies offline, they indicated that there was high levels of absenteeism amongst other issues. The other thing was when we looked at the manufacturing base, we go and see places like Caterpillar or AGCO. All of them would tell us they were having labor issues. But more specifically in the supply chain, they were having a lot of issues, or their suppliers were having a lot of issues getting labor into their companies. So what we did here was we geospatially analyzed where these large energy infrastructure projects were. We looked at where every manufacturing facility that in terms of U.S. manufacturing was, and we overlaid the CDC data. And what we found, unfortunately, was, in places where projects were late, drug usage was well above the national average. And we also found, in terms of manufacturing, we zoomed in on counties where manufacturing was a big percentage of the overall labor pool. We also found drug usage was above the national average.
Do the companies themselves, Samir, do the companies themselves tell you what you found? In other words, that we believe that the absenteeism, the lack of labor productivity, the lack of qualified workers, or the presence of disaffected workers is related to opioids. Do they say that?
No, that's a great question. I think to a large part, a lot of these companies dance around the issue. I think there's a certain stigma associated with talking about this. When I first published this report, we got a broad range of reactions. But what was interesting was everyone seemed to have a personal anecdote. Everyone seemed to know somebody or knew somebody that was personally impacted by the drug usage. So I would say, these companies are aware, but I think, a report like this or people talking about it more can help them address the issue more broadly.
Are we at the point, Samir, where this is impacting earnings per share? And what, if anything, are the companies doing about it? Because what we heard from the last Beige Book, for instance, was that in some places they were relaxing the requirements in order to cope with this. So that doesn't seem like that would solve this problem if they relax the drug testing standards. It seems like it may make it worse even.
Right. Yeah, I think for your first question, I think there is a noticeable impact. If you think about a large energy infrastructure project late, costing hundreds of millions of dollars, is everything related to drugs? Absolutely not. But is there a material factor there where people are unable to get the right labor? Absolutely. Ultimately, I think, as the labor markets tighten, we're getting later in the cycle, companies are going to have to face this issue one way or another. And I think the next logical question to be asking is, what can these companies do to help their local communities, especially the ones that help build them into the iconic brands they are, like Caterpillar and John Deere?
All right, Samir, we got to leave it there. Fascinating report. Thanks for sharing it with us.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.